Christmas is officially cancelled on Wall Street and you better have a contingency plan, otherwise you're going to sink as well. This piece of news was hitting the markets at the worst possible time. A Friday, a day after Thanksgiving holiday, when markets were completely illiquid and most of the banks were operating at half capacity, meaning that the big boys were either down in the Hamptons with family or recovering from a nasty hangover on Wall Street. Just to put you into perspective how bad Friday was, the S&P 500 suffered its biggest drop in 2021. It's way too early to predict any economic and policy implications of the new COVID variant, but judging by the immediate reactions of the market, it's not looking good. And imagine that next week a vaccine company will come out and say that our jab is effective against the new variant and you get whipsawed all over again. Most of the investors are nervously waiting on further data on the new variant. Because the news hit the market during the US session on Friday, most of our Asian trader friends didn't have the opportunity to respond to this development. So until we don't have more information about the response of the governments and central banks, I don't want to comment any further, but what we can do is look at the technicals. Because we don't know how this news is going to affect the market and have no information about the policy response of governments and central banks, everything that we discussed today could easily go to the bin. And more importantly, we have NFP next week on Friday, which means we could easily see that they slap down the price today or tomorrow, and then they're going to pump up during the NFP number. And this is why it's really important to manage your risk and do not use crazy lot sizes which are not suitable for your account. The first scenario which I'm going to explain is obviously bearish, because this news is really bearish on the market. We're back to square one, the same as 2020 beginning, when investors had no idea what to expect and how to prepare their portfolios against the COVID. You can see that previously we've drawn two trend lines, this bottom ascending bullish trend line and this descending bearish trend line. So if I just zoom out, we are on the daily time frame. You can see that so far I explained that price is going to move in between this wedge until it's closing in. And right now, the current situation is perfectly confirming my analysis, because what we see is a closing in wedge. And I think because investors are waiting out for the policy response of central banks, this wedge is going to be closed in very soon. And once we have clear communication and we're out of the woods, then we're going to see a break to the upside or the downside. But more likely what's going to happen is we're going to see massive fake outs to the downside, to the upside, and the market is going to move sideways for a while. At market open tonight, we could easily see a similar sell-offs what we had during the flash crash when the Asian market opened and the traders responded to the negative NFP news and they started to sell off their assets and liquidated their portfolios and positions, and the market completely crashed. We could easily see the same kind of situation when the market opens tonight and the traders in Asia respond to this bearish COVID news. They start to sell off their positions and the market could easily melt again to 1680. If we're lucky and if we can catch that drop, or what we would want to see is a break of this trend line, break of the previous market structure, so the previous low at 1770. And if you're lucky, if you go down to a smaller time frame, we want to see a retest of this bearish trend line before the drop. Now be careful with the selling and make sure that you lock in any position you have, because we have elevated uncertainty on the market. So what we don't want is we don't want to swing in these market conditions. Take any profit that you can make and be happy with it. Seriously, do not hold positions too long, because price could easily whipsaw within minutes. If we have a positive news release that some big vaccine firm comes out and say, oh, we have the vaccine which is good against the new COVID variant, you're going to see prices and markets are going absolute crazy. But on the other hand, if we have negative news, you're going to see investors pull out all the money from the market and look for safe haven assets, for example, US treasuries. The other scenario is obviously it's a longer run, but if you see any break to the upside and the retest of this trend line, then we're going to see new all-time highs very soon. But if we see a similar type of situation when the first COVID variant hit the market and we didn't even have the lockdowns yet, but people started to worry and governments started to introduce new measures, the markets were absolutely hammered and gold skyrocketed, because obviously that was the natural response of investors, that they're looking for safe haven assets such as gold. And bear in mind, we didn't have inflation at that time, so that massive bull run back in 2020 was purely caused by investors looking for safe haven asset. And this year we have something which is called inflation, so the prices are going up in a really fast way, which further could boost gold in the longer term. But remember, we're not in normal market condition. But if you see a similar kind of response from investors this year, like in the previous year, back in 2020, what we could see is investors are flooding again to gold as a safe haven asset, and they could easily pump up the price back to the previous all-time highs above 2000. Now this is a really bullish scenario, and I don't want to bet all of my money that this is going to happen, because we live in elevated uncertainty, so we have absolutely no idea what's going to happen. So in these uncertain market conditions, what I'm going to do is I'm going to do more live streaming and live trading with my team at the AlphaFox Academy, and also I'm going to closely monitor the news to see any kind of developments which could affect the gold market and any other markets, especially paying close attention to central bank policy responses and the government response. Because bear in mind that interest rates are at all-time low, no one raised the interest rates yet, and if we have another kind of recession or crisis, central banks have absolutely no power, no ammunition to respond to another crisis, because they cannot lower the interest rates any lower. So they have no tools to respond to another crisis. And governments also have a really tight budget, so there is no way that they can spend more money, because the empty money supply is at all-time high. So all the money has been ever printed in the United States of America. 40% of that all money was printed last year during the first COVID hit. With this massive amount of cash lurking around in the economy, inflation prices at all-time high, it's not looking good, and we don't know how the governments and the central banks are going to respond, but they have really limited options. That's why I always say be cautious in the next coming months, because we could see the markets responding in a really irregular way and whipsawing up and down. Now, the first thing you can do in order to get some daily updates is join my Telegram, which is a public and free Telegram, and now have the opportunity to chat with me, because every single post I put into the Telegram channel, now you have the opportunity to comment on those posts, which is a great way to have communication with me and also to express your opinion about what is going to happen in the markets. So I put the link under the video in the description. Join my Telegram group and leave a comment under the video, smash the like button and subscribe to the channel. This is the AlphaFX.